at 4.5%. Right on the edge of where you start to get into the equity market danger zone. You have news around technology that's been a little more uncertain, policy uncertainty. You add all these things together and you get what looks a little bit like market paralysis. And there's 2 points I'd make about that for investors. One is that policy paralysis doesn't mean investors have to be paralyzed. I think there's a lot of changes we could make here. And the second is that the through line, despite all the uncertainty around tariffs, trade, and other policy priorities, is that the world is changing, that we're moving into a more polarized, and what I think is a very capital-intensive investment backdrop.
How do you see it?
So, it's really interesting because there's a lot of angst about all the policies coming out of Washington, and yet we're sitting less than 2% from the all-time high. And it's kind of relentlessly flat market, 2 steps forward, 1.5 back. This feels like the year because you really have two countervailing forces. You have the promise of growth and deregulation, countering the threat of inflation and higher yields. And so that's the conversation, essentially, since we started the year and since we started the new administration. How does this all play into growth and inflation? So the market has not made up its mind yet. I'll say this, I think that it's really important for tech to hold leadership here because the earnings and the margins come from tech. So if that sector starts to falter, if the Magnificent Seven, the top 10 of the S&P start to falter, you'll get weakness in the rest of the index.
You will, because you really didn't get that. I mean, obviously, you're going to get if the biggest market cap stocks, have a problem. Obviously the S&P may have a bit of an issue, but to start the year, tech wasn't one of the best performing areas at all. It did spread to the rest of the market. You had a nice broadening out.
You had a nice broadening out. It just has to stay in line, right? You can't have a situation where all of a sudden you get too much capex and earnings revisions go lower because the margin growth, and we're looking at 13.7%.
Welcome to the stream, everyone. I did all my trading pretty much today, throughout the day. So I'm pretty much done trading. But if you watched Sunday afternoon open, I called for let's see what I said. I said it's gonna go up to if you remember, here's the open. I said we're gonna go to 21,800. So we almost hit it here, right? 793, pulled back, just right at the 200-day moving average. It was pretty much support on a 200, and then it finally hit right around here. Like I said, wasn't sure when it was gonna hit. It might take hours, and it did right around, say, 2138 for 940 or so, 936. So it did reach a target that I called for. If you didn't watch, if you're not here for that, you can go back and replay the Sunday market open live stream. And then if you remember, if you were there, I said, so we're gonna pull back to the upside, right? And then Monday morning, we're gonna be slammed back down. And here is the open. This is the opening 6:30 right here. This bar right here is the open. So we went up to the highs and just produced a topping tail, and the rest is history. So if you entered at 760 and exited at 460, that's a 300-point move. That would have been a nice gain. Um, I mean, it was just nice, and wow. I wasn't available for this. So let me just see if I can pull up. Actually, I did take a couple orders up trades at the open. Let me see, Phil. There it is. So I shorted for profit. Same thing here, just scalped, and then I shorted here, and I had to leave. I didn't want to leave the trade on, so I just closed it. And then I just scalped here. Pretty much. And then I went long here. Actually, let me see. Can we pinpoint this entry here? I got in here, and I got out right at the top here, as you can see here, with 2 contracts. And I had to leave. And again here, I got in, and I got out right over here. Then I shorted here for 5 points, and I had to close down the platform. So that was my trading for the day. Looks like we're gonna go back up here. Let's take a look here. So this move was pretty let's see, from the highs to the lows, roughly about 60% we traced. So now we're back down to about 50% from this high to this low. So now if we take a look at the 15-minute chart. Actually, so we might be just chopping around here now. We got about 25 minutes left till the close, or we might revisit these lows and then just chop around. But let's take a look at the longer time frame charts. This is the 15, 30. The 1 hour. So again, these support levels we are sitting, so we are sitting here at the support. Let's take a little look at this daily. Yeah, so we came down. I think that's what I mentioned too on the stream. We're gonna retest these. We need to break below that to, to retest this, but that'll be a huge move. So We got the whole week to do that. And we might even retest this level here around 21,000, if not the moving average of the 20-day moving average, the 200-day moving average. Let's see what the 4-hour looks like. So we did break it significantly, right, with this bar. Retested it, and we'll see what happens at the close. I'm going to play with the micros here. Just we'll see what happens. So it does look like it wants to go lower and retest these lows. But just in case it wants to reverse, we'll put these orders in here. Just in case. Because we might be producing here a double bottom here. Recent double bottom. So we'll see. Put the target there. Let's see what happens. These are micros, so not a lot of risk. I'm not gonna give my profits away. Just play around with them. Oh, I don't think it's gonna happen. Hmm. Maybe this round number of 500 will be support. Let's see here. I'm gonna get rid of these orders. So we are at 500. Let's see what happens. Here we are. I'm gonna add just if we break above this bar. Oh, 35 area.
on the macro numbers when the U.S. is settling back. It doesn't mean that the growth rate in Europe has surpassed that of the U.S. It just means versus expectations. This helps explain why markets are doing what they're doing. By the way, I'd also observe how it's gotten to be a narrower range here as we get past and beyond the pandemic by year. It sort of shows you the economy's in a more normal, predictable state. That's also a net positive. Here's the way the S&P 500 in the U.S. has performed relative to the Euro Stoxx 600. Now, this is a 1 year, so it shows you the massive lead that the U.S. had built up against Europe, and then the very pronounced comeback move by European stocks. Banks are participating there. You got the ECB is going to be a little more easy, perhaps, than the Fed. And there's this fiscal impulse, basically, for political and policy reasons. The governments over there are expected to do more spending on defense and other things. So for now, we're seeing these come together. It's probably a lot to ask to say that this becomes a real enduring trend, maybe just a mean reversion, John.
And I wonder how much policy plays into this. Out of Washington, I was looking at that first chart and trying to figure out exactly where November is, because election day, we saw that big run up in stocks and crypto and some other things, and some optimism around the Trump administration kind of tearing down some barriers to business doing business. But tariffs were also a big part of that narrative, which would be bad for economies in Europe, one would think. But then there's been a bit of a reversal. Any sense of what that might mean, especially given the news today with Macron and Trump meeting?
It's probably well, first of all, there was in the U.S. a post-election kind of release of spending. You did see very strong November, December consumer and business spending. So that probably was just more of a reaction to decisive electoral victory than maybe expectations of a policy could do. That has now settled back, right? We have a little bit of a hangover effect in some of the consumer spending numbers and some business confidence metrics in the last couple of months, whereas in Europe, they're coming off a very low base. I mean, parts of Europe were in recession, and so I think they're benefiting from the fact that we're seeing finally a cyclical turn. And then, as I said, you know, we got the Fed maybe having to go to the sidelines while the ECB, in theory, remains in the game of perhaps cutting some more.
Interesting. Always more to learn. Mike Santoli, thank you. See you in a bit. And after the break, much more on the U.S. versus the rest of the world when we're joined by the Chief Investment Officer of TIAA Wealth Management. He's going to tell us why he's bullish on the U.S. and where he's putting money to work now. And later, is the IPO market about to break out? We'll talk to the co-CEO of private markets investment firm Hamilton Lane about the sectors he says are ripe for deals. Overtime's back in 2.
Walton Goggins goggle glasses. I didn't know how to turn all this fancy prettiness into a classy-looking logo. But GoDaddy Aero does, with its magical AI powers. It not only creates it, it slaps that sweet thing everywhere.
Okay, so my kitchen was more than just retro. I dreamed of a new kitchen, but a full remodel? That's pricey and a pain. Then I found Enhance, and it was super friendly to the old wallet.
We'll take it from here.
Guess what? In just 1 week, Enhance completely transformed my kitchen. My kitchen went from drab to fab. We got a whole new style with new door and drawer fronts, new organizers, and now I have a place for everything. I mean, look at this place. It's the best decision I've ever made.
If you're shopping for a home, Realtor.com's Real Commute tool lets you find homes close to work, school, even grandma's house.
Don't all apps do that?
Not really. Trust the #1 app real estate professionals trust.
The dentist will be right in.
Hey, I heard you're retiring soon. You excited?
Yeah, Doc, but there's so much to consider. Medicare, finances. Oh, and I lose my dental insurance.
You can get your own from Physicians Mutual. Easiest decision ever. It's real dental insurance that's real affordable. Well, I think my work here is done.
Wait, what?
Hey, I heard you're retiring soon. You excited?
Get the Premier Dental Plan from Physicians Mutual Insurance Company, one of the easiest retirement decisions you can make. For a free information kit, call now. It helps cover over 400 procedures, everything from cleanings and fillings to crowns and dentures. See any dentist you want with no deductibles and no annual maximum.
Well, I think my work here is done.
Wait, what?
The Premier Plan from Physicians Mutual. Call or visit sendinfokit.com for all the details.
Physicians Mutual, Physicians Mutual.
Welcome back to Overtime. The U.S. underperforming much of the rest of the world to start 2025. iShares ETFs for Europe and China are both up double digits, while the S&P 500 is up about 2.5%. Our next guest says he still prefers domestic stocks to international. Joining us now is Neil Mukherjee, TIAA Chief Investment Officer, who oversees $1.4 trillion in assets under management. It's a lot of money, Neil. It's a lot of money. So tell me about how you're thinking at this time. Well, we're under 6K on the S&P. There's been some broadening in this market away from Apple, Google, Microsoft, Nvidia, which I guess would be a good health sign for the market, but a lot of uncertainty over what policy is going to be, and with rates stubbornly high, whether stocks can move higher. Why do you believe in the U.S. still?
Well, the growth story, John, first of all, thanks for having me. It's always great to be with you. The U.S. growth story, I think, is still a very good one. There's some nervousness in the marketplace with respect to loss of momentum in U.S. growth. I just think we might be going through a bit of a soft patch. We pulled in a lot of that growth momentum into the fourth quarter of last year. We saw a massive spike in consumer spending over the holidays. So a bit of a soft patch is to be expected. But it's still a 2% economy, which is pretty good. The labor market seems resilient. It's slowing down in a controlled fashion. The high-income consumer is spending. They're being supported by a high level of net worth. They're earning good returns on their cash on the sidelines. But also, we're watching some key risks in this economy. So you think about the policy uncertainty. You talked about the higher interest rates. Small businesses are under pressure because of higher funding costs. The housing market is a bit stalled out as well because of affordability issues. But net, this economy still seems to have a 2% growth built into it. And don't forget, the prospect of deregulation, reshoring, etc., and business confidence, which is rising, that can support this economy going forward. So we remain optimistic on the U.S., but there's some catalyst